Signals in the deep, markets never sleep. Whales move silent, but we speak. On-chain truth, no disguise. This is Leviathan, open your eyes.
GM fam, and welcome to a slightly late Llama party today. It is Friday the 13th, June the 13th to be more specific. I'm sure it's not going to be unlucky for all of you because we are very, very lucky because we have an amazing guest with us today. We have Scoopy Trooples from Alchemix, who was almost the winner of the Squid Pass for the next week. We'll get to that in a second. First, just want to give a shout out for this past week. The Squid Pass was held by Yearn Y Bold. And we've got a new, gorgeous Leviathan theme one. This is our permanent Squid Pass. So this QR code is permanent. It just each week when the winner gets it, it's going to change owners. So there was an auction that just wrapped up about 2 hours ago. The new Squid Pass will be coming to you soon. It will be eager to see who won that. But in the meantime, if you're interested in bidding on it, you can always go to leviathannews.xyz, check out the auctions tab. Pro tip, you might want to, if you're planning on bidding on it, study up on Frax, the financial engine of the internet, and how to get some tokens on Frax, because all of our auctions take place on Frax still. The person who almost won it this week was Scoopy, but Scoopy, you didn't quite get in there in time, did you?
No, I tried to buy about 15 minutes left on the auction, and then it was my first time bridging to Fractal chain, and I had to figure that out. And then once I got there, then I had to swap my Frax for Frax ETH, and then from there for some Squid. And by the time I finally got Squid in my hand, it was too late to bid.
That's right. That's right. Now that you're there, though, first of all, you could say pretty good experience using the Frax bridge, right?
Oh, once you learn how to do it, I mean, it's not bad. I was looking for something immediate, I could just send my ETH over to Fractal, but you have to actually convert your FXS tokens on mainnet to the Frax L2 gas token, and that was a bit of a learning experience, but
Well,
was
once
good.
Frax IPOs, I'm sure that this was going to become fodder for some analyst report on how to price the IPO. You could see the Frax took over the Vegas Sphere the other week, dubbing themselves the financial engine of the internet. So good stuff. Good stuff. Scoopy, you are not with Frax though. You're not with Leviathan. You're with Alchemix, and for the entire bear market, you survived. First of all, congratulations.
Thank you.
Because that's not an easy feat, right?
Yeah, we got hit with that Curve Viper reentrancy exploit that happened on the ETH pools, and our Al ETH got hit by that, and so we have been, a lot of recovery since then, but we're basically back to normal now, and things are looking good.
That's very good to hear, because that was such a harrowing time. It's we did, as if the bear market wasn't bad enough to then get hit with that, which infrastructure that had been essentially bulletproof, and were it not for this really obscure compiler bug, man. Oh man, that brings me back.
But we survived, and yeah, I think the M stable team is also one that got hit by that, and they're doing okay as well. So, we got some tough characters in DeFi.
Absolutely, absolutely. And what's most exciting about it is that you have amazing plans for 2025. Here, let me bring this up because I saw this as your pinned post, and you've got more ambitious end of year goals than most. For me, I just want to stop eating Doritos so much. You are going to let's go through all these. You're going to successfully deploy Alchemix V3. And I understand you might actually be dropping some alpha about Alchemix V3 on the show here.
Yeah, I figure I could get cute and share a bit.
Nice. And presumably what's gonna cause TVL to grow by 5x, liquidity by 3x, getting ALUSD and AL ETH on major lending markets. You're gonna go cross chain, have some friendly forks. I mean, this is amazing plans for before the end of the year. So I'm super excited to see what comes. You should add to it also that you'd like to get Alchemix into the Open Stablecoin Index.
Oh yeah, I've been working on that. Been talking to the open people, and if you been an ALCX voter and governance, there will be a little airdrop that you guys will be eligible for. So
That actually came out 4 days ago. So check if you are an ALCX voter, check the openstablecoinindex.com, and that airdrop should already be out.
yeah, apologies. I'm traveling, so I'm a little discombobulated as far as what things are happening right now. But we made it
Definitely,
today.
definitely, yeah. Super glad you could make it. All right, so let's talk about Alchemix V3. Actually, though, before we do that, like I'm sure that like the 300 some people listening now are like fairly familiar, but maybe there's one or two who haven't heard about Alchemix and this like concept that you pioneered of self-repaying loans. Could you talk a bit about that?
Yeah, the current way that Alchemix works now is that so you would deposit into Alchemix whether it's ETH, USDC, DAI, or Tether or Frax. And then when you deposit it in, you select a yield strategy. This could be something like Yearn ETH. It could be a LST like Wrap Staked ETH, Frax ETH, Pyrex ETH. Um, or for stable coins, it could be yield-bearing strategies such as Yearn or Aave, Jones DAO, things like that. And then, so your principal for a CDP is earning yield. And then you can borrow a synthetic version of your underlying collateral. So if you put in a stable coin, you can borrow a synthetic stable coin. And if you put in ETH, you can borrow a synthetic ETH. And what happens is that the yield that your deposits earn repays your debt over time. And because of that, we have self-repaying loans. And since the synthetic asset is priced according to the collateral, there is no liquidations as well. So you have, yes,
And it's
self-repaying, non-liquidatable loans.
and it's such a cool concept in particular because like I don't often tell people outside of crypto what I do, but when I do it's like I'm always looking for like real world use cases that people can understand, and people understand the concept of self-repaying loans. It's kind of like this like magical thing that like it seems like magic, right? Like that's where you had the whole wizard hat theme, is that like it's like you're combining all chemically all these chemicals, and boom, this like magical chemical reaction occurs and you have these loans that self-repay.
Yeah, we have money that's backed by yield, so that's pretty cool. Yeah.
And yeah, it's like people, it's hard enough for people to at the beginning of DeFi summer to even understand that like you can get these good yields in DeFi, and then even better when I know people who have like bought houses because of Alchemix loans. Like they were able to basically take out a loan, get the money they need, and the loan just repaid over time. It's amazing.
Yeah, that's cool. I've never heard of house, but I've heard of like boat, college tuition, medical bills, all sorts of other things.
So,
Mm.
so yeah, just truly a like truly like you planted your flag in an amazing concept. So that's Alchemix V2. What is known publicly at the moment about Alchemix V3?
That I've probably just been teasing it a bunch, but I haven't really talked too much about it. I guess what we could do before I really talk about V3 is talk about some of the shortcomings of V2, where we're currently at.
Yes, please. Yeah.
Um,
What did you learn from the whole experiment?
Yeah, so when we launched Alchemix, it was in the middle of the DeFi bull market, and everything in the system was working really, really well. And we thought because we were geniuses of mechanism design, but it really turns out that a lot of that was, we were riding the wave of the bull market. And then as we've been in this now, 3-year extended DeFi bear market, we've had a lot of learnings about where the system, had some shortfalls. And probably the most poignant of all of them is in the pegging mechanism for ALUSD and ALETH. And so when I was talking earlier about the self-repaying loans aspect, is that when your principal makes yield, that yield is liquidated and used to repay your loan, but then that yield goes into a peg stability module where people can swap ALUSD one-to-one for DAI USDC, Frax USDT, or ALETH one-to-one for ETH. And this system you could get a one-to-one swap, but it would be dependent on the flow of yields from depositors, and also it's dependent on how many people are looking to redeem their assets. So if you had a lot of people looking to redeem their assets, then it would take a very long time for those assets to be redeemed. Or if the yield is really low, it would take a long time. But conversely, if like not many people were like trying to redeem and the yield is very high, it would be very fast. But the problem is that it's a variable rate, and even after you deposit, the rate can change as far as like how fast you're being the redemption is happening. And because of that, we don't have enough capacity to contract when we need to contract, and that contraction is important for maintaining the peg for the synthetic assets. And so, with that in mind, we've redesigned the peg stability module in version 3. And instead of it being these variable rates, variable durations, um, it's now fixed durations for your redemptions. So the protocol will set an amount of time for how long the redemption will take, and then you can know when you stick it in for a redemption exactly when it will be mature, and you can get a one-to-one redemption for it.
Interesting.
And
Okay,
yeah,
so basically, like based on the
and so
current market
yeah.
dynamics, the protocol itself is going to be saying that, like, if you take out a loan for $1,000, like you take it out right now, and you know that you'll have it paid back in exactly, let's say, 1 year, and
Mhm.
that.
Well, it's a little bit different. It's more like the redemption. Let's say ALUSD is trading at like 98 cents on the open market. And let's say a redemption time is 2 months.
Okay.
Okay, so you could earn that 2%, going from 98 cents to a dollar in 2 months. And if you annualize that over a course of a year, that would actually be a 12% fixed APR.
Which is very good,
So
needless
it
to say.
creates it creates kind of like a bond market for the synths when they are off peg.
Interesting. Interesting. Okay.
Yeah, even slight deviations, let's say cents, that's still like, if you redeem that for one, that's still a 6% fixed APR. Or if we shorten the redemption period to 1 month, right, at 99 cents, that'd be a 12% APR. So you could see that like this mechanism creates demand for the synthetic asset once it falls off its peg.
And this is presuming that the asset repegs after the end of this. If, like, for some reason it's just trading at 98 cents at the end of the term, then there would be no gains, or is there
No,
something
no, no.
different than
So
force?
let's say you put in 100 AL USD and you bought that for $98. At the end of the term, you'll get 100 USDC.
Got it. Got it. Okay, so it's
Yeah.
repaid in USDC. Okay.
Yeah. Yeah. So it turns the AL USD and AL ETH into, when you redeem them, into fixed savings rate bonds, essentially.
And I'm presuming that this is like this was inspired by the fact that, like, over the course of ALUSD's history, you've seen its peg fluctuate, here and there, right?
LUSD has been relatively strong. I think at one point it fell below 97 cents, but it's been in the 98, 99 and higher range for basically 4 years now. Ali, especially after the Curve Viper reentrancy bug, um, that fell all the way down to like zero point 0.6 Ali per ETH after that incident, and it's been a long, slow grind back up to like 9.7, 9.8
Mhm.
in the last like 2 years.
But if this
If we had
existed, then
if we had a better pegging mechanism, it would have been fine probably in a couple months.
got it, got it. Now, if ALUSD in this new incarnation just holds its perfect peg, then there's no opportunity there to basically to run this play, right?
Yeah, but if when it's like on its, let's say it has a really strong peg, one of the benefits of having a stronger pegging mechanism is that we can offer higher loan to value uh, borrowing rates or borrowing ratios. On ALUSD. So right now it's capped to 50%. So if you put in $100, you can borrow 50 ALUSD. In V3, we're aiming for 90%.
Wow.
So you can, if you put in 100, you can borrow 90. And let's say, ALUSD is, strongly pegged. You could loop that
That's what I was about to ask.
without sacrificing much on basis points. And then you could theoretically get up to around 10x your original TVL. So, yes, you would have 10x more debt if you looped it like this, but you would have 10x more TVL, a principal. So you'd be earning essentially 10x more yield.
And that
Minus the basis points that you'd be losing, and the fees, swapping and everything like that. But yeah, technically you could earn a lot more yield. So when you're on peg, it becomes a very, very attractive lever loop yield farming degen kind of like a yield farming strategy. And when it's off peg, it becomes this discounted bond buying
and
opportunity.
you could even loop it when it's off peg and just get more returns, right?
You could uh, get, if let's say like it's like 98 cents and you're trying to loop it. You might want to max out at like a 2 or 3x leverage on your position, because you would lose a decent amount when you're looping in that
Right.
basis.
Okay.
So if you do it, the more you do it, the worse the losses will be with the leverage. So you would want to limit that a bit, at least according to the simulations I've done on the system. But if it's 99 cents or above, then the looping, like, you will most certainly make more money from looping.
Interesting. And like I think when you say 90% LTV, like that's pretty much like the about as capital efficient as you can get in the market, right? Like, is there anyone that's got? I think CurveUSD is like 87%.
I think I think there's some Aave markets where it goes up to like 95% or something like that. But we're dealing with yield bearing collateral. And one other thing that we're changing in V3 is that instead of giving users like a big selection of different yield strategies to choose from, we are going to consolidate it into a DAO curated yield token, which is going to consist of several different yield tokens. So instead of there being like an Aave, Yearn strategy, and some various other ones, there'll be one yield token that will be diversified across different strategies
Okay.
to offer a good mix between risk and
Okay.
safety.
So instead of having to kind of pick which
Yeah.
particular strategy you're going to go with, that's just going to be abstracted away. The DAO is going to control that.
Yeah, we want to be within a couple percentage points of leading rates, but definitely better than something vanilla like
Right.
Aave.
Right. Now, if this is the case and it's going to be spread across many baskets, like how does the risk management work in? What happens if like one of those one of those strategies implodes? Because at this point you're connected to like a
Yes,
bunch of different potential risk sources.
totally, totally. So we have a framework that we're starting out with, where we're identifying different sources of yield and yield strategies, and we're categorizing them by their level of risk. So we have low risk, medium risk, and high risk. Low risk are things like Aave, very well established yield protocols like Yearn and Beefy. Medium risk are more things like LP positions. Think your Curve LPs, think your Pendle LPs, things like that. And then high risk are more like these looping strategies or contango strategies that are out there. And consequently, we would basically cap the high risk stuff to be like, we're thinking somewhere between 10 and 20%, and medium risk stuff capped at like 30 to 40%. So ideally, we'll still have a good safe mixture. And so prevention, and yield asset selection is very important. That's the first step. And the second one is that we will actually have a liquidation engine in Alchemix V3. So if a strategy takes a loss, let's say we have some, 10x lever loop strategy, and that's, let's say that's 10% of the portfolio, and then that gets nuked down to zero. So automatically the yield token would lose 10% of its value. And um, what we're thinking is 90% is the LTV, and then if you go above 95%, that will trigger liquidations. So in that scenario where this strategy is 10% of the whole thing, it takes a complete loss down to zero. that would trigger liquidations for people who are highly, or who have borrowed a lot, who have a very high LTV. But that's there mainly to ensure that there's not bad debt for the system. As long as the yield tokens and strategies that we have do not take losses, or the losses are minimum, there should be no liquidations in the
Okay.
system.
Okay. So in this scenario, like the borrowers take a liquidation, but in theory, that should keep the peg of ALUSD or ALETH. Okay. Is the
Mhm. Yes, yes, yeah. Because like, yeah, it'll count for, those yield tokens that just got liquidated,
Mhm.
right? So the collateral, and
But then
yeah,
okay.
enough of that at its new value will be reserved for, yes, uh, yeah,
Right. Right. And
liquidations. So it balances the
nice.
books.
So everything's fine on paper, and in blockchain, you can't just make new money. And in theory, if people panic and sell ALETH or ALUSD, then other traders can basically come in there, just take advantage of this Alchemix V3 mechanism, and get if it's down to 95 cents on the dollar, that's just like really good annual returns to actually like go in and borrow.
Yeah, I'd like to think of it as, if it's on peg, it's great. It becomes like probably one of the best levered yield farming protocols out there. And if it's off peg, it's also great because, yeah, you can get fixed APR, uh,
Right.
very high rates. So, and the thing is, both these systems, they're kind of self-stabilizing, right? So imagine, AliUSD, or like, yeah, AliUSD has a huge influx of borrowers and depositors, and then a lot of these people are lever looping, and then that pushes the price of AliUSD down, um, and then that makes a lot of people buy it off of the market. So the LPs who just took all those impermanent losses, they will get basically reimbursed from people buying back the AliUSD, and get trading fees. Um, and then the thing is, when people go to redeem in version 3, they're getting it from the collateral. That's how we can guarantee the time for the fixed redemption periods. So basically, the system will account how much debt you have, and then do a time weighted debt, and then compare that versus how many redemptions need to be done. And it'll start to transform your normal debt into something that we're calling earmark debt. And that earmark debt is debt that you have that essentially uh, is being reserved for future redemptions. Redemption won't happen until the person who's redeeming will hit that button and execute it. So um, during that time, you will still be earning on your entire principal. So even though part of your principal is being allocated for redemptions, you're still earning on it the whole time
Could you walk through an example?
until that actual redemption
Could you walk through
happens.
an example for me of how this
Yeah,
might work?
let's.
Like, imagine I want to buy a burrito, so I borrow 10 ALUSD, let's say.
Yep. So let's say you have $100 deposit. You borrow 10 for your burrito. Your 100 is, let's say, earning
Hmm.
5%. And then your burrito, when you first mint your debt, you'll have 10 LUSD debt. And then as redemptions start to go through the system, what you'll see is that your ALUSD debt will start to change. So it might say, right now it might be 10 ALUSD debt. In the future, it might say 9 ALUSD debt, 1 earmarked debt. And then a few months later, it might say 8 LUSD, 2 earmarked. And then finally, what will happen is, that redemption will be called, and that earmarked debt will then be reduced. So let's say your earmarked debt goes down to 0, so the 2 are cleared. You would have 8 debt now, but you would also have 2 less collateral. But if your collateral has been earning yield this whole time, then
I might have an
it
extra
will
dollar
be,
worth of collateral.
you might have extra. It depends on your kind of your LTV. If you have a very low LTV, you'll find that your collateral will grow, and your debt will shrink. So it will actually compound, whereas in Alchemix V2 it doesn't. It's marked to market and then just liquidated. Yield is liquidated, whereas this one doesn't. So if you have a low LTV, it's really good for spending and
Hmm.
saving. Um, And at high LTV, you'll notice that you're going to be getting earmarked and redeemed a lot faster. But since it's like it's a neutral thing, you're getting $1 of your collateral redeemed for $1 of your debt. It's not, let's say, as painful for users as say getting redeemed in something like Liquidity, where you're losing your ETH for your position when the bolt is being redeemed.
Got it. Got it. So this is really cool. It
Yeah.
makes a lot of sense. Now, like, what would you say is kind of like the primary market you're targeting for this? Is it much more like with 90%? Like, are you looking for like the highly leveraged, like degen crowd? Are you looking more for the like the slow and steady, like I just want like a safe way to buy a burrito crowd? What's the like? What do you think is going to
We
benefit
we
most?
So Alchemix V2 right now, we're kind of catered more towards the casual and safe user, because if you let loop an Alchemix V2 at 50% LTV, you can really only get 2x leverage on it. So it's a use case more suited for the passive burrito buyer, but V3 it still does work just fine for that use case for somebody who wants to um, you know earn yield in DeFi, but then also have a line of credit on it. If you have low LTV, then it'll feel almost exactly the same as Alchemix V2. But then if you are a more degenerate user or you're a liquid fund manager, um, you can go into Alchemix and you can really, I think, get potentially market leading rates. Imagine we get a 10% aggregate on stable coins, and then you can lever up, 7, 8x on that. You're going to be getting the best yield rates. And the cool thing about it is with our kind of aggregated yield token strategy is that if there is something that's really hot out there, let's say like, there's this pendle strategy that's getting 20%, we can just add it to Alchemix. And so that 20% leveraged, or 20% APR leveraged pendle strategy can now be a part of our token makeup. And then people can then get further leverage on that for their yield farming. So we aim to be able to match, if not beat, basically any other yield protocol out there. And it's not even like we're really competition for the pendles or for the yield aggregators, because we can work together. Like we can integrate them directly into our yield token, and when you deposit into Alchemix, you'll be basically spreading around your wealth across multiple places in DeFi. So we don't even really see ourselves as competitors, more enhancers.
Got it. So your biggest competitor would be Aave.
Um, The thing is, we would also have Aave as part of our token basket. So even then, we're not even really a competitor. They have their Go stable coin, but the way that their mechanisms work is different than ours. So people who like our stuff, and want to, yield farm stable coins, I think there's probably, you know, I don't think there's many better options than Alchemix
Got
V3.
it. Got it. No, it makes a lot of sense, and I think it's gonna be very clear. So let's like I always see these things in terms of like trade-offs. So like you have V2, which worked really well, and then you're like enhancing the feature set for V3, which seems to like it seems like you can kind of keep it at feature parity with V2 if you like, or you can have this other experience. Or am I thinking that the right way? Or is there like other trade-offs in this new design, which users of V2 might want to be aware of?
Yeah, so for users of V2, the one big difference is that like your collateral can shrink. If your LTV is very high and redemptions are, being heavily used in the system, then you can actually see your deposit shrink. Whereas in Alchemix V2, it never shrinks, never grows, but never shrinks. Um, and so that is one key difference. But again, if you have a very healthy loan to value ratio, then even in a high redemption rate environment, then you'll grow and your debt shrink. So I think for existing users, if they don't want to see their collateral be redeemed at all, they might want to repay some debt to get to a little bit healthier of a loan to value ratio. But other than that, like I think version 3 is very compatible with version 2 in our existing user base, but it also expands, yeah, to the people who are looking to get the most out of their money, whether that's the degenerate yield farmers in DeFi or the liquid fund managers who are out there.
Okay. So we talked about the
I
case
also
where. Oh, go ahead.
Oh, yeah, sorry. I was also thinking like if you're a DAO with a treasury, I think it makes a ton of sense to use Alchemix. Let's say, you're a DAO with like a $5 million treasury and you can put in Alchemix, let's say we're earning 10% on that. You'd be bringing in $500,000 a year from that. And you could be basically borrowing as you go in ALUSD and paying people in ALUSD for payroll, and you could see basically your treasury being regenerated over time. You'd see your debt shrink, you'd see your collateral grow, and I think that would be a really powerful thing for DAOs to eke out a couple extra years from runway as they're trying to seek revenue and profitability.
Yeah, I mean, Leviathan. If we ever get to a $5 million treasury, yes, absolutely. But we got ways to go. But no, it definitely would be interested in using it. So even given the fixed term mechanic of this, like it still could be like useful for DAOs, which have to kind of have more passive strategies because sometimes multi signers are tough to scare up. Like
Mhm.
it's possible to like have it roll over at the end of the term.
Well, like I wouldn't say this would be a great thing for DAOs or slow moving organizations to do, like kind of like the leveraged farm strategy for it, because as you get redeemed, you would have to reestablish your position. Let's say you go in with 1,000, you lever up to 10,000, and then you have 9,000 debt. You might find by the end of the year you'd have like $1,500 in principal and zero debt, and so you could lever it back up at that point or any point in between. So I think that's one strategy that's not good for DAOs, but I think just for doing the passive strategy where you have your principal earning yield and then you have your debt being repaid automatically without any interest, I think that's good.
Yeah, definitely, definitely. Okay, so we covered the case where ALUSD goes down in value, and the case where it like is on peg. What happens to the system if ALUSD is trading at $1.02, $1.03? There would be
Oh,
like
then
no incentive to borrow, right?
there'd be ton of incentive to borrow because then you could be
Okay.
looping, and every single loop you make, it would make a instantaneous profit.
Oh, okay. Never mind then. All right.
Yes,
I-
being
it-
overpay would be a wonderful problem to have.
okay, so you have all the bases covered. Is the important
Yeah,
thing.
the only way I could see that happen is like if ALCX, our governance token, and Curve, and other DEX tokens all like 100x overnight, and then we're seeing like 1,000% APR, and everyone like floods in. We get 10x the liquidity, but there's not enough ALUSD out there, so people are just throwing in staple USDC and DAI and stuff in there, and that could cause that to happen. But I doubt that would happen.
I mean, like I almost like the bull market's like a distant dream at this point, but it kind of felt like it at the height of the bull market where just everything was going up, right? So maybe who knows? Maybe it could happen.
Yeah. I
But
mean, I would not say no.
okay.
I'd be very happy with that. Yeah.
So what's the role, if any, of oracles in this entire system? I'm kind of curious to hear about like how you look at the oracles and manage the risks there.
Yeah, so we're building with the ERC 4626 standard in mind for our vaults for the CDP collateral. Um, and we are going to try to rely on fundamental oracles as much as possible. So in a ERC 4626 token, let's say it's denominated in ETH, it will have something called a tokens to shares price. And let's say your yield token, one share, it would say it might be worth 1.05 tokens. Right, so that would be a fundamental oracle is getting that tokens per share price in the underlying token, and that's what we're looking at as far as our liquidation engine. If these 4626 strategies indicate that there's been losses, it'll reflect in the fact that there'll be more shares per token, essentially, or fewer tokens per share. Um, And in that case, we know if there's been losses in the system. What we're not going to do though is use like price oracles for, let's say, if we're going into a liquid staking token like wrap stake ETH, for example. Um, we're not going to use the price oracles for that because those are currencies that are directly redeemable one to one. And so as long as we know our liquidators have a path to get a one-to-one redemption for the constituents of the token, then we're fine with that. So, having a withdrawal queue would be, something that would be necessary for any LST to be listed with us.
Got it. Makes sense. Makes sense. And by the way, a big shout out to the 1,000 people watching us right now live on X and YouTube. So if you are among those 1,000 people, take a second to retweet this, share this with all of your friends and family. Get as many people watching this as possible. We're talking Alchemix V3 with Scoopy live and taking questions. So after you've retweeted, go ahead and drop your questions. We can see them in the overlay. We'll go ahead and ask them. And take a second to click on the Squid Pass, scan that QR code and see where it's pointing this week. It's still, spoiler alert, heading towards Yearn's Weibold, but it could change anytime. That's the beauty of the Squid Pass. Go to leviathannews.xyz, participate in our auctions, and you can grab this for next week. Excellent. Okay, so this all makes sense. And then getting back to your kind of, I want to say like half New Year's resolutions, because you seem to drop your end of year goals like 6 months into the year in May or June instead of in January, like most people. So obviously you see this growing TVL, you see liquidity growing from this. What about like you talked about deploying it on one more roll up? What's the cross train strategy for Alchemix V3 going to look like?
Yeah, so we're currently in the process of upgrading our bridges. Right now, they're using the XERC20, but connects the originators of that. They're basically shutting down their bridging and they're only doing intent. So we have Wormhole right now, but we're also working with a layer 0. So we're going to have that all up and running in the next couple of weeks. So it should make it for pretty easy getting around. Right now we're on Optimism, Arbitrum, and Mainnet, and we'd be looking at uh, possibly base at this point. That seems to be the next destination to launch.
Okay. And then as far as the user
Yeah.
experience, is this going to look like I could like manage my position on any chain, or the position is like native to a single chain? So I can have a position on base that redeems on base, or like it
Yeah,
could
so
redeem.
each position would exist on its own chain, but the UI is going to basically show you all your positions across all the different chains. And we are partnering with some middleware providers to allow for cross-chain zapping. So let's say you want to deposit on the Arbitrum one, but you only have ETH on, let's say, base. You could zap your ETH from base to Arbitrum, and it'll be deposited on Arbitrum within 2 seconds. So we have some nice quality of life features that are going to make the UI very seamless to use when doing cross-chain stuff.
That's very cool. That's very cool. And then it's going to be USDC and Naked ETH as far as the collateral tokens. Any plans for others?
Yes. We're going to start with those for now. We might have alternative or new vaults that are going to come online, new meta vaults, maybe one that focuses more on decentralized stable coins, for example. Because I think I'm really interested in Liquidity and their Bold token. Always, big supporter of Curve USD as well. And I think having, you know, a token makeup that is of decentralized stable coins would be a pretty cool thing to have. But there's no reason why we can't do that. As long as the market says, yeah, people want to redeem for Bold and Curve USD as much as they want to redeem for USDC, then it should be fine.
Okay, makes sense. And then you also mentioned in your New Year's resolutions that you'd like to have at least 3 friendly forks of V3. Is this going to be like similar to like Aave or like Liquidity, where it is possible for people to kind of spin up instances forking the protocol and having some of those some benefits accruing back to the Alchemix DAO.
Yes, that is the goal here. We've spent close to 3 years working on this, and over $500,000 in audits thus far. So, and we think it's a really awesome protocol. We're really hyped and pumped to launch it and get it done. Um, but at the same time, like creating these yield tokens and maintaining them and having these different deployments and maintaining all of them, it does take a lot of work. And as much as I would like to launch Alchemix on 50 different chains, I don't think our team of 15 could reasonably handle that. And so we're thinking about one, two, maybe three more chains, like, or roll-ups total, that we would do with Alchemix. But anything beyond that is too much for us. So we're looking to have people kind of stake different territories. Like, for example, I don't think we have any intention to deploy on Monad, for example. It's not even out yet. But you could see, when it does launch, if there is a burgeoning DeFi ecosystem there, that they might want to have an Alchemix on their chain, and some a team over there could license a fork with us. And we have a couple things in mind for a licensing agreement, but it wouldn't be anything too extractive. Just something says, hey, uh, this is like a token gesture for your team to give back, and in return you don't have to do all this hard development and audits and all that extra cost, and we can actually promote you guys, and feature you on our pages, like a as a partner type of thing like that. So I think there's a lot of reasons for a startup to want to do that, to kind of uh, give back to Alchemix, but also piggyback off of our brand and awareness as well. I think it's a win-win
Yeah,
situation.
I feel like a lot of builders in this space kind of underappreciate how important audits are, but also how much friction they add to the whole development process, right? Like in Web 2, you just like launch a new feature,
Oh yeah.
roll it back if it's buggy, and you can have that done in a week. An audit's going to cost hundreds of thousands of dollars, a long time. Who'd you go with for your audits?
We went with Cantina, Immunify, and Spearbit.
And good experiences with all three, or do you want to throw any under the bus right now, live to a few thousand listeners?
Oh no, we like them all. They're really good. Special shout out to Spearbit. We are very happy with them, and they also run Cantina as well. But we had a really great auditor with them.
Excellent. Okay. That's good stuff. Good stuff.
Yeah.
There's another question. Oh, fees. Like you hinted about it, but what does the fees structure look like for Alchemix V3?
Yeah, so there'll be a fee on the earned yield on the meta yield tokens. We're not sure exactly what we're going to set that at. Probably somewhere like between 10 and 20%. So that'd be the fee on the earned yield. That'll just be straight on the deposits. And the other one is, well, there's two other ones. One is, if when you're doing a redemption, if you do not wait to maturity, you can do an early redemption, in which case you'll get all of the redeemed underlying collateral, but you'll take a penalty on your unredeemed ALUSD and ALETH. So that's a fee right there. I think that's going to be like 1% or something like that. So nothing too drastic. It just more of like make it a little bit of friction to have people wait till the end of the redemption period. And then the other one is a fee on redemption. So let's say, and this is going to be a really small fee, I think, uh, half a percentage or less. And whenever somebody has a portion of their collateral redeemed, let's say you had 100 redeemed and it's 0.5%, you would have an extra 50 cents of collateral redeemed from you as a fee for that. So that, in a high redemption rate environment, you might see, you know, maybe 1 or 2%
Okay.
fees on your debt
Okay. Seems.
at most. But in a low redemption, you'll have no fees on your debt.
Yeah. And then these are going to be just fixed, or is it the DAO can adjust the fee structure on new loans?
These will be parameterizable according to the DAO. I think this is something that we want to tie to the redemption period, because if we have really long redemption periods, this fee might go up because the churn will be slower. But if we have really short redemptions, this fee might go down because the churn will be a lot faster.
Got it. Got it. Okay. All right.
Yeah.
I mean,
So basically, we don't want to make it exorbitant. We want to make enough money that we can keep the lights on at our organization, and then for the rest of it, just make the best DeFi protocol we can for everyone
yeah,
else.
absolutely. And I probably should have mentioned up front that I have a little ALCX, so I'm definitely hoping that it goes well. So that's a disclaimer that I might, I'm pumping my bags here. It's not like it's not a handsome amount, so it's not like I'm going to be moving into a mansion off any of this, but
Who knows?
that's
Who
true.
knows?
And of course, all that caveat, not financial advice and all that. One of the things you mentioned is that you want to get the Ethereum Foundation to notice you. I'm stunned if they haven't. Like they have to know about Alchemix. Alchemix is like OG status for sure.
So I was slighted recently.
What?
And this is a bit of a subtweet, me saying that exact word choice, but somebody from that neck of the woods slighted me recently. I was just like, man, I can't let this stand. So
No, it must have
I'm
been.
not going to name
a
names, and oh no, it totally wasn't.
Jeez.
But
Okay.
whatever.
Well, if anyone, from the limited experience I've had interacting with the Ethereum Foundation, I think they mean well. So I can't imagine that, if anyone listening has any contacts with the Ethereum Foundation, make sure you like pass along a note and explain how amazing
there's a lot of people in
Alchemix
the EF.
is.
There's a lot of people in the EF that I know and I like, but it's just this one person had a rather biting comment about something I did recently, and I was just like, man.
Is his initials VB?
No. I wake up every day looking to see if VB follows me on Twitter, and all I got was Tolly from Solana following me the other week. So I was just like, man, this is no consolation prize.
Wow. Well, maybe you should move to Solana.
I don't know. I've said a lot about Solana.
Oh man, I guess I need to disclaim I own some Solana bags too, and some Ethereum bags. I should probably be more careful about that. All right. Before we close,
back to the token, we are working on a tokenomics upgrade and a governance upgrade as well. That's almost ready for audit. So maybe we can get it out this year if audits are not too intensive for it. But it's we're calling it the VQ system.
VQ.
Think of voting queue, actually.
Voting
so
queue.
Or vesting queue. So imagine the ETH staking queue and V curve had a baby.
It'd be an ugly baby.
Yeah, it would be a monstrosity. But there's some pretty cool things about this system that we like quite a lot, and we think it has a lot of the same advantages of the voting escrow system that Curve uses, but also we think solves some of its pain points as well.
Oh, that's cool. That's cool. I mean, as a person who's like been following Curve for like 5 years now, it's been amazing to see like how people have taken the initial concept and ran with it. So very much look forward to more of that as it comes out.
And then the other thing, I think I talked about 3.1. And that one is actually cool. We don't know if it's possible yet, but the idea is we just take the V3 system. Yeah, we take the V3 system, but we make it so arbitrary collateral for arbitrary assets. So you could use ETH as collateral for ALUSD, USDC as collateral for ALETH, Bitcoin as collateral for ALETH or ALUSD. You name it, and it should be able to work like that. We'll have to do a little bit more research on that front to see how the redemption and earmarking system will work with that, but it should work.
Interesting. So this would be
pointing to that.
This would be like for traders, I'm guessing, who are like really like have a strong opinion on which way the market's going over the fixed term.
Well, yeah, but you could also think of it like if you want a long ETH, you
Mm-hmm.
could, borrow ALUSD and then buy more ETH that way.
Interesting.
So there's it's not just longing the yields or like because if you borrow AL ETH, you're either shorting AL ETH ETH by selling it, or you're longing the yield by looping it and farming for it and
Interesting.
stuff like that. Whereas if you can borrow out USD with it, you can now long ETH. So
Interesting. Okay, that's cool stuff. Okay, all right, man.
yeah.
So much cool stuff, and I also have like more questions I want to get to. But like, did I ask everything I should be have asked about Alchemix V3, V3.1, your new tokenomics? Anything else in
Uh,
like that sphere of things that I should have asked, but I'm redacted, so I might have missed?
I mean, I feel like I've probably missed a couple things here and there, some of the nuances about the system, or maybe I didn't explain things as clearly as I could have, but I think we covered a lot today.
All right, no,
There'll be more
that's fine.
information coming out about Alchemix V3, so just stay tuned to the official Twitter for Alchemix, and anything that gets posted will be posted from there.
Yeah, you got to save some material for the lesser podcasts in the ecosystem, right?
Yeah. By
Otherwise,
the
yeah, they
fifth
got to eat
time I
too.
talk about this, I'll get the explanation down.
No, it's super cool. I mean, while I have you, I do want to like get your thoughts on like some other things. One of which is like I remember last time we talked, you were talking about self-repaying ENS names.
Hmm. Yeah, we got that out, and that's been in prod for a while. We hit
How's
some
that doing?
snafus. I mean, we launched that right before the curve hack thing happened,
Oh yeah, yeah.
so kind of it was down for a while. Then after we got our systems back up enough, we got that back up. It has some usage. I think we have a few dozen users that are, Discord every once in a while, for support, but it didn't get as much usage as I would like. I think in the post 7702 world, being able to, one click it instead of having, like 5 or 6 transactions to set it up will make it a lot easier for users. It's the same thing with like the Holy Held integration that we have. So we have like a self-repaying, credit card essentially, with in partnership with Holy Held. But in order to set that up for your Holy Held wallet, it's like, you know, I think 5 or 6 transactions. So being able to bundle all of those with 7702, I think is going to be really important for, appealing to, the non-hardcore crowd of users who are out
Hmm.
there. Because I remember back in like 2018 when I first went to MakerDAO and I had to go from ETH to WETH, then from WETH to PETH, and then deposit my PETH into this thing, then borrow. I felt like that was a nightmarish experience. And now it would be like really easy for me to do it because I'm experienced. But for newer users or for the people who are not like technologically adventurous, I think being able to bundle and batch all these transactions into one is going to be a huge UX upgrade.
Or like bidding on the Squid Pass.
Yes,
Like,
if there was this app for me to take my mainnet ETH to buy squid in one transaction and bid on it, I would have won this week.
man, we should do that actually. Why don't I do that? Yeah, that's a really good idea. Okay, I'm glad I talked out loud here.
Yeah,
But
so I
be
mean,
careful
yeah,
because it's
having
going to
good
get
UX is also
super
a
competitive.
big focus for us.
Well, that's one of the things I thought Alchemix always did really, really well.
I'm breaking up. Can you hear me still?
Yeah, I can still hear you. I think it might be on my side. I was gonna say that's one of the things I thought Alchemix always did particularly well was just like a intense focus on the user experience, so that like whether you're a power user or like my grandmother, you could like log on and like really understand what's going on, how it works. So I think really cool stuff.
I
Um,
wish I could share the UI because the V3 UI is, I think, a big jump forward as well. I'm very
oh
proud
man,
of it.
man,
I think it's beautiful, but also functional.
man. Well, again,
And
saving for the
it's gonna have a lot of good little bells and whistles. So like yeah, the cross chain apps, we're gonna integrate portals. So like let's say you have, I don't know, some Pepe token. You can use that directly to deposit into an Alchemix vault. We'll just zap it behind the scenes. to get whatever currency that you want. So we're gonna have that all built into the UI, cross-chain zaps built into the UI. Uh, yeah, it's gonna be a good thing. No wallet switching for you to do in the UI. It's all gonna be taken care of automatically. So
Well, full disclaimer, I do
it's gonna
not
be
own
nice.
any. I do not own any Pepe tokens, so you kind of lost me there. Um,
Yeah,
but
neither do I. But I was going to say Fartcoin, but that's on Solana. So
um, no, like zooming out just a bit because like running up on the time limit. I want to get your thoughts on this. Like, what do you feel about the fact that like stable coins have all of a sudden become like the dominant narrative in an industry that's like wildly whipsawed between narratives? But like you're right in the heart of this narrative with ALUSD.
I think it's cool that stablecoins are part of the narrative, and I think that one thing that we really have to be, vigilant over is also supporting decentralized stablecoins, because I think those are very important to, the financial freedom stack. I know we're going to see a lot of, tokenized dollars, USDC, USDT, and like dozens of other new ones that are coming out, and they'll probably have the majority of the market share, but we do need to have successful decentralized stablecoins without blacklists. Our liquidity bolds, our curve USDs, um, our AL USDs,
Very much so, yeah. What's your
so
thoughts on it? Do you think that like the stablecoin narrative as I'm describing might just be limited to kind of these like centralized like USDC type USDT type centralized stablecoins, or do you think that like a rising tide is going to lift these centralized stablecoins as well?
I mean, I see it playing out more like a Pareto thing. People are going to want to go with the trusted and safe option, 9 times out of 10, especially if somebody is risk adverse. That's why they're in stable coins. So they're going to gravitate to USDC, USDC, yeah, TT, USDC, and then other stable coins. The other new ones probably won't get as much traction. They'll probably have to offer really high yields to grow their
The
base
centralized
and stuff like
the
that. But
centralized ones won't be allowed to offer
yeah,
yields is the funny thing.
well, I mean, geopolitically speaking, if the U.S. wants to maintain dollar dominance, then they better let people earn some yields on these things because having people, if we have $2 trillion in stable coins, that's going to further ensure another decade of dollar dominance at least. So I think it's in
Yeah,
the
I mean
you know
it's apparently.
strategically speaking, if they want to have them grow, they need to offer some type of yield or RWA wrapper
I mean, it
for
might be
them.
tricky because the drafts of the legislation doesn't seem to permit yield-bearing stablecoins for at least for like the ones that are like going the route of becoming like a permitted regulated stablecoin.
Yeah, I wonder if that's going to be like they have the regulated one that can be used as legal tender, and that's no yield, and then there's like the staked version of it that you can put it in.
So on some level, I think this is where like
I
this is
wonder,
where I think the like
but we'll
open
see.
stablecoins are going to do really well because it's like people might be like, okay, fine, well we'll mint the like the Taco Bell USD and we'll bring it on chain and then we'll go to Curve and we'll swap it for like ALUSD or like any variety of other stable coins and that are decentralized and are offering the yield. So I think on some level a yield prohibition could be super bullish for open stable coins.
How do I go long Taco Bell USD, man?
You're gonna have to build it, and you have to pay for the audit for it. Any plans for yield?
Want some cheesy gordita crunch peg stable
Yeah.
coins. All
Any
right.
plans, by the way, for a like a natively yield bearing Alchemix USD?
So, with the way that the redemption system works, we should be able to make an auto compounding version of it. Um, but that's going to be part of the
Right.
expansion after we do that. Whether that's going to be done through like a yearn or we do it in house. Um, but we definitely think that there is a lot of potential there for it. And we do have the potential to make a stability pool where you can earn ALCX for depositing ALUSD and ALETH. But we could also potentially like maybe increase the fees on our yield for deposits and then stream some of that back to like a stability pool for the Al assets. So there's some ideas on there that we can do, but we're probably not going to just mint new ones and just inflate the supply like that, because ultimately if these things go off peg, they're going to get redeemed, and that would hurt depositors, if there were there's more supply out there than collateral. So yeah, we're not going to do that.
Got it. Got it. Good stuff.
Um,
What about like the general like what's your like broader thoughts on where the market's going in like 5 years from now, and where's Alchemix going to be positioning itself for 5 years from now to like own this market?
oh man, five
I
years in
know it's like
crypto, that's like three
your great great
lifetimes.
great.
Well, hopefully Ethereum will be $100 trillion asset by then.
Seems inevitable to me. Flipping Bitcoin probably, I'd imagine too.
um, well, I would hope so. That would be fantastic. But I definitely think crypto is gonna, the path isn't gonna be direct up and to the right. It's gonna be meandering with ups and downs. But I think we're gonna be a lot higher by then. I think there'll be a host of institutional players involved, basically more of what's happening now, but then we'll also see, more involvement in DeFi from institutions. We'll see a bifurcation of the DeFi market, one that catered towards institutions, and one that's more user focused. And I think we're going to see, hopefully, Alchemix is right there in the thick of it. I don't think we're going to get to Aave levels of TVL and stuff like that. It's very hard for
I think you'll get to Aave levels of
things that are
TVL.
not lending markets.
I think you'll get there. I just think Aave will be at
I
like
would love to.
Aave will be at BlackRock levels of TVL by that size.
Well, yeah. I mean, if Aave hits, basically my goal is for Alchemix to get above 1 billion in TVL. If we can get above 1 billion, then we can run indefinitely, and not just run, but we can grow. At that point, we can hire more devs. We can, grow the team. We can make new apps and do other things like that. Maybe even, start to go after lending markets and that vertical, or swaps and things like that. So, the goal one is to make Alchemix V3 super successful. I'd like to get to 1 billion TVL in it, and then from there, just keep on building. I mean, I love DeFi. This is, I changed my life in 2018, stopped what I was doing so I could learn to be, blockchain and Solidity and, DeFi developer. Well, it wasn't DeFi back then. It was just MakerDAO really. But seeing, that stuff being built, it inspired me, and here I am. And so I'd like to continue doing this as long as possible.
Awesome. Any parting words of wisdom for people just entering the space?
For people just entering the space, I mean, have an open mind and try out a lot of different things, and learn as much as you can. Go into the trenches in Discord and make friends and share alpha with them, and hopefully you can learn a bunch and make some money in the process.
Cool. I'm never quite sure how to spell your name, but so do you want to like tell people how they can find you?
Yeah, on Twitter, I'm Scoopy Trooples, spelled SCUPYTROOPLES. Scoopy Trooples with the U, for the first oo sound. And yeah, so that's me on Twitter. And then if you go to my project's Twitter, Alchemix Phi, so Alchemix Phi, and then we're also alchemix.phi is our website. And you can, join our Discord from there, and you'll see me in Discord. You can see me on Twitter, and yeah, say hi.
Excellent. Well, thank you so much for joining us. Thank you especially for spilling all the alpha on Alchemix V3. Super excited to see it launch. I definitely will be in line to be among the first users when it does go live. As I'm sure will the several thousand people who are watching us live on YouTube and X. So thank you all for joining us. Thank you for sharing it. I hope you have a fantastic weekend. And yes, squids, we'll catch you on the next tide.